weekend. Ira Epstein with your weekend edition of your metal market update, and this is for Friday, the 6th of December, 2019. You know, I just did a lengthy interview, couldn't have been an hour ago, with the people from Wall Street Journal, Dow Jones. And the question was about the metal market to me. What do I think? And the importance of what's coming up and why the metal market fell today, the stock market going up, trade talks. I stuck my neck out and I said, you know, if I'm President Trump, and I'm not, I said, and getting into his mind is never the easiest thing, why would you, regardless of how the Chinese deal is going, not give an extension beyond December 15th on the next round of tariffs? I'm not saying a phase one can't happen. That's not my point. What I think is that he's going to say, let's give them a little more time at the worst. Now, why would you do that if you're him? Why take the stock market away? You got an impeachment hearing going. We just got unemployment numbers of 3.5%, historic numbers of people are at work. Why ruin the other part, the 3 years of the stock market going up when you have this facing you? You can always, in January, put them on. Boo. So why own the gold right here? And if you think about it, a week and a half ago, I put out my gold report on our website. And one of the things I was looking for was a break into the latter part of December. And then I'm looking for the market to get its footing. We'll see if that's right or wrong, but that's what I was saying. In the energy market today, and I say that because of the metals, you're always looking to see if inflation's there. I don't know what this is. This is window dressing for the Saudis to get their Saudi Aramco deal going. Whether or not anybody's really going to cut, Nigeria hasn't met its compliance. They said today they finally got there after 6 months. I saw the interview. Yeah. Now they want them to cut even more. You haven't been able to get them there for 6 months. Now you want more. Okay. You can sell everybody what you want at any point in time. As I look at a monthly bar chart in gold, we had that phenomenal spurt that the market got its footing at the 1300 level and kicked itself up rather smartly this year. Then it got over, whether it's a weekly chart, a day chart, or whatever, you rarely stay over a Bollinger Band more than 5% of the time. Now, I came up with my own far-flung idea that if you use a rule of thumb, that each successive week that you close over it is one of those percentage points, it gets you into good stead with the market. And all it's telling me is that instead of chasing the market at those levels, for the longer term trader, maybe you can come in at better levels. And what's starting to happen now is with this week's break, we got down this week to 1450, 330. We ended the pattern of higher lows, higher highs. Where's the major support? 1345, 1340. What else is going on? Momentum is turned down as measured by the slow stochastic oscillator. So I have a market that, at least for the moment, stepped out of an uptrend. Admittedly, the bias is up. Something else is happening. I want you to look at how the 100-day average, which is green, I'm pointing the wrong one. This is the green, and the 18 have been for years. Suddenly, the 18-day average is trying to climb over the 100. If it does so, it's called a bullish crossover. I have no idea why gold would go up or down the road. In fact, I take the name off the chart. When I look at a chart, I'm saying to myself, okay, there's a longer term change happening. It's a monthly chart. It doesn't happen often, and you can see that. I mean, this chart goes way, way back. Here was your bearish crossover. Then you finally have come back where the averages are getting more bullish. That's all the point is. When we topped out here in the August-September time frame at 1526, we've now broken about $70, and the bias is still down. If you believe bias, as I do, can be measured by where are you in relationship to a moving average, and that's what I do. When the market is over the red line, I have a bullish bias. When it's under it, I have a bearish bias. Bias filters other indicators that I use. When I look at this chart, you can almost see how the market has been stepping ladder itself down, certainly not crashing, working lower. This market bottomed out in this time frame and has moved itself back up. Since the peak right here in that August-September time frame, this is the pullback, and the market admittedly has a pattern of higher lows, higher highs on the weekly chart. The resistance on the weekly chart is that 18-week average, unable to punch through it so far. When you take a look at the Bollinger Bands, the lower Bollinger Bands have been holding the market. And the theory there is when a market hits a Bollinger Band, that it's like a fence. You hit it and it can run against it, but it's rare that it stays outside of it. Can it do it? Most certainly can. But it often then results in sideways to lower action, and that's what's going on. The market has been in a general pullback looking for where a support zone is. It is not bullish. It's still overall on the weekly charts, in a down, or what is it? Well, let me explain that. It's nothing. You have higher lows and a higher high. That's bullish. You're under the 18-week average. That's downside bias, and you have momentum pointing down. As far as I'm concerned, you have nothing in the chart. It peaked out up here, and it's been working itself back down. When I come to the gold ETF, I have the same type of pattern. I've got the higher lows, higher highs, but we have been staying under this 18-week average since back here on November 8th. The market lost its mojo, momentum pointing down, and if anything, the market's been making runs and trying to get to that lower Bollinger Band. It still may. But that's where I'm looking for general support. No, that's not where I'm turning bullish. That's just a support zone. Close over the 18-week average, I'm going to change my opinion on the market. But you got to get back over it. And the reason you'd have to get back over it now is because you still have even the GDX with the higher lows, higher highs. See, you have that part of the equation, but the markets are staying under the 18-week average. In the gold-silver ratio, it doesn't favor a bull market in gold just here. Silver is losing the gold. Generally, when the metals go, they go together. The market that's been the exception this year is the palladium market. It's in short supply. Europe and China are committed to the climate change, to cleaning up air, and you need the palladium. As much as people want to think that the platinum market can substitute for palladium, it doesn't. And in, generally speaking, gasoline cars, you're using the palladium. If you look at the silver, you've been coming down, and finally, we're back down to a lower Bollinger Band. Haven't been there in a long time. I'll go on record saying this is where I think the pros are going to start covering their short positions. Just as they get overdone here, I think they're getting overdone there. No, I am not bullish. What I am is just saying that I think that the shorts are now in an area where they can be covered. In the copper market, you're going to play the world of China here. All right, is it a good deal? Is it a bad deal? Will a phase one happen? Won't a phase one happen? This is called a churn. It's taken a while, but it's gone from the lower Bollinger Band finally today, first time, it got up this week to the upper Bollinger Band. So we have a trading pattern that's developed, and it's starting to act like could be something of importance. Now, is it a bottom? Well, if there's no trade deal and one doesn't come about, it's probably a top. If there's a trade bottom, it's probably a bottom. I'll let you figure that one out. I don't know which way they're going to go. I gave you my logic for the year. I don't understand why the president would kill the year in the stock market. He can do that very effectively in January if he wants. He still has a great record for the end of this year. In the platinum market, you're stuck against the 18-week average with support at the 100. You've been proving that for a while. The swing line has got lower highs, lower lows. You can negate that by next week, the market not taking out this week's low. The way the swing line would work, and I'm going to teach you that in the charting course that I'll talk about in a minute, it's right through there. Here's the bull market. This is the biggest commodity performer of 2019. And it has to do with a mixture of where does palladium come from, China committing to cleaning up its cities and automobiles that don't pollute as much, Europe obviously going to the clean air part, and America's already there. You know, buy a car without a catalytic converter in America? Are you serious? Unless it's electric, I guess. Dollar index, I just see it flat. I was watching today financial TV. The analysts are as mixed as can be. Going into 2020, is the dollar going to have an up year or a down year? For 2 years in a row, I have watched the analysts come out, and this is going to be year the dollar falls. It hasn't been. This has been, if anything, when the dollar has gone up. Our economy's in good shape, but Europe was falling, Asia was falling. We've seen that. Is this where the turn is? I think part of that depends, do we get a trade deal or not? Now, let me explain what I've got for you, and this is the simplest way to do it. I've put together a Cyber Week sale that ends next week. And if you wait for the very end, it's just going to snap on you. I'm not going to tell you the day it ends. In it, what I'm doing is I'm putting in my charting course for free with a purchase of any of my research packages that are 1 year in length. And we offer special pricing on them. You get double discounts. Now, you're going to learn what I do. You're going to learn my 5-step method. It's all done by videos. You're going to learn swing lines in detail. I'm going to teach you how to draw them on a chart. Then you'll be able to do it. And a lot of the charts in my videos, I cover the names. You don't know what it is. I don't want you to. I don't want you to get swayed by what you already know. I want you to look at a chart and be able to try to figure out what do you think the trend is. Are you going to lose on trades? Absolutely. But you learn money management skills. You learn that before you even go in. Hey, the risk is too big for me. Or no, I like that one. You're going to look like Swiss cheese as a trader in markets, other than the stock market for 11 years. Of course, if you pick the wrong one, you still are Swiss cheese. Moving averages, you're not going to just learn what you see here. There's more of them. And I'm going to teach you how to use one specific one that relates to the 18-day average in a very specific manner. Momentum, all the little studies that I use in the slow stochastics. Bollinger Bands the same way. I'm going to teach you what to do when you, by the way, lose a slow stochastic that's embedded or not. How do you play that market? And then something you never see me do here, which are window envelopes. And the only reason I don't do window envelopes, there's be so many lines on your chart you might get confused. 5 steps. That's it. I think you can master it. And how does it come about? It's 54 videos. All together in time, 5.5 to 6 hours of videos. You see what I do, then in the charting software you're going to get, you do the same thing, same data. It's that way. I believe in rote. Watch one thing, do it. From there, can you add your own studies? Of course. I don't walk on water. It's a discipline. And I try to put together what that discipline is. Now, as I said, we have different research packages. It really works this way. One of the packages is the morning only video. That runs as little as $156 for the year. With it, you get the charting course, which is $179.95 value. The next thing that you get, you can go to the commentary only. It's slightly more, not much more. Or the whole package that I have, again, not much more. When you add back the value of the charting course, away you go. You figure it out. By the way, if you wanted to take this course, give it as a gift to somebody, I'll allow that. If you don't want to start it now, you want to start it next year, that's fine with me too. The research will start the day that you bought it. That's how I work that. How do you find out more? Go to our website. Under the word research, it tells you all the different packages. Call my staff. They'll be happy to work with you. You can do that on Monday. I promise you they're gone for the weekend. In any case, I'm Ira Epstein. Thanks for watching. You have a good weekend, and I will see you all come Monday.